talk about Meta as a mistake. So what is our latest thinking on Meta?
So as you say, we've identified Meta as a mistake. And specifically, what we think the mistake was, we've invested in controversial businesses before. Think about MasterCard around Durbin when we first made our investment. We've invested in businesses that are exposed to rapid change, Google, around when we first made that investment and through our holding period. But in the case of Meta, what we did is we invested in a controversial business that was exposed to rapid change, and we made it a large position. And when you factored all three of those things together, we basically determined that that was a mistake. Meta remains one of the most debated positions within the firm. And there are some very good reasons to think it's one of the most attractive positions in the portfolio. And there are reasons to believe that it probably belongs in the too hard pile and perhaps we should trim or exit it. And maybe I'll just give you a quick kind of summary of those two. So on the plus side, you could argue, look, 2022 was just an amalgamation of a lot of headwinds all at once. On the one hand, you had Apple remove their ad tracking apparatus, the ATT, which certainly affected Meta, their Facebook and Instagram properties, amongst a lot of other companies that rely on ad tracking. You had the rapid rise of TikTok and the response you saw within Meta with their Reels product towards short form video format. And then you had the general slowdown in the economy for a business that was a large part of the digital ad market. And digital ads, unlike the great financial crisis, the last time we saw a big cycle in the ad market, digital ads are now a significant part of total ads. And so it's just harder to swim against the stream. And so you could just say, look, this was a uniquely tough year for the business. And let's step back and kind of look at each of those challenges, and maybe they are not so concerning. And so let's start with the ATT, the ad tracking point, where you could say, yeah, there was some initial damage to the business because they couldn't quite get the same amount of data they wanted on their consumers, but they've actually invested in, they have significant AI ML capabilities. They've improved their data tracking around the new rules, and they've already closed the gap pretty substantially there. On TikTok, you could say, this is not the first time that Meta has gone through a change in format like that. We went from the Blue app being mostly a text-based format to pictures, then you went from pictures to video. And so this is just another one of those changes in format. And they've been through this before. And by the way, there's evidence that they're actually catching up to TikTok recently. And then in terms of the overall economy, there's weakening in the economy. That's a cyclical element. That's not necessarily a fundamental challenge that the business is going to have to face long term as ad market comes back. If they solve those first two issues, then we should start to see the business recover. There's also a third element, which is obviously top of everyone's mind, which is metaverse spending. The company CEO Mark Zuckerberg has basically made the decision to spend upwards of $20 billion in the coming year on developing the next computing platform around the metaverse. Right now, you could say, well, is that such a crazy idea? If he succeeds, he's going to substantially increase the moat of the business. He's going to generate attractive returns on the investment that he's made. And if he's going to fail, this is a rational company historically, and they'll cut off the spending at some point, and actually that $20 billion will come back to you. And so you've got not necessarily irrational spending. You've got not necessarily permanent changes from some of these other headwinds happening. And then when you step back and look at the valuation, you can say, even if you capitalize that 20 billion metaverse losses, in other words, assume it just continues forever, the business trades for 15 times earnings, which, by the way, is less than the S&P 500 today for a business that's likely to grow faster than the S&P 500. And by the way, if he ever either got a return on his metaverse spending or cut it off, the business is trading for more like 9 times the earnings of the social media networks.
So that doesn't sound too bad, and that's clearly one side of the debate. But what's the other side of the debate with Meta?
Well, like we said, this is a probably the most debated, if not one of the most debated investments in the portfolio. So let's take each of those elements now, and I'll just very quickly go through the other side of the argument. So ATT, this loss of signal that Apple's rule changes essentially imposed on the business, you could argue just basically showed the world that Meta's hold on its consumer and consumer data is not as strong as it is in other businesses and in other networks, say like a Google, or certainly in the case like an Apple. And so you could say, well, that's a fundamental problem in the business. When you look at TikTok and the move towards short-form video, you could say, yeah, they've done transitions before, but by the way, several of the times they relied on acquisitions, like the purchase of Instagram, to make the transition. And so why should we be so confident that in this instance they can do it on their own? Now, they've done them before on their own, but like I said, they've relied on acquisitions before, and I think we can confidently say acquisitions are likely off the table going forward. And then in terms of the $20 billion spending on the metaverse, just to link it back to ATT, I think there's a very reasonable argument to make that Mark is making the investment because he realized he doesn't have the relationship and the lock on his consumer, with his consumers, and lock on their data and as much as he'd want. And so he wants to own the next compute platform. And so this is actually defensive spending and necessary spending, and that might mean it lasts longer for larger than you might think. Oh, and by the way, Meta is not the only company making these investments. You have behemoths like Apple and others making similar investments. And again, Apple has a history of developing very valuable ecosystems. That is not something that Meta necessarily has done before. And so couldn't you make the argument that actually betting that Meta is the winner in the metaverse is a little speculative? And so, yes, it trades for a reasonable price, but gosh, look at all the issues here that it's dealing with, and doesn't that mean it probably belongs in the too hard pile? And that's the basis of the debate we're having. At this point, the debate has resulted in us deciding to maintain our investment, but we continue to have this debate, and we'll see where we end up.
I want to talk about